so-called democratization that you were referring to has been, let's say, an ongoing challenge. There are structures which might support access for private wealth. You can see that the asset base of Evergreen is growing, but according to the figures that I could get from the usual suspects, it's still representing 1% to 2% of the total of assets under management in private markets.
That's much lower than I thought it would be. And you also seem quite cautious about this. So this isn't something that everyone's charging towards. It sounds like something that's quite tentative.
Yes, I mean, the figures are from Prequin, but there might be other figures which show a little bit higher level.
I'm sure you're correct.
It also, no, I don't pretend. It's just, it depends what you consider as evergreen. I have a very strict definition. They should be doing mostly or only private markets, so they shouldn't blend other assets in the product. But you're right. It's more challenging, I think, that a lot of people thought. They thought you could industrialize and roll out, and anyway, private clients would have this kind of systematic and, let's say, rigorous approach, but also which can be implemented seamlessly. And it's not that simple. So the good news is that now we have a wider pool of tools that we can use, and you can combine together, you can then somehow adjust and tailor. But it's still, for example, challenging even for a high net worth individual to access the asset class, because regardless the tool, the asset class itself doesn't scale up or down very easily. So if you have a client with a 5 million net worth, and he or she wants to allocate that to private markets to some extent, let's say 5 to 10%, right? It's not that easy. You want to diversify over time. You want to diversify strategy-wise. You want to diversify maybe industry-wise. And then you want to diversify maybe manager-wise. And now you start to have this matrix, right? Where you need to combine these constraints, and simply the amount of capital might limit you. And so it's not smooth sailing, as I said. But the good news is now we start to have the tools which support some of this capital deployment, and then we need to do arbitrage. But so this is a learning process. It's a learning process for the fund managers themselves. They might have a theoretical knowledge of it, but it's different from theory to practice. It's a process also for clients. They need to get their head around it, get familiar. It's still a very strange animal, private markets. They differ from the rest of the other strategies. And then it's also a working process for us because regulations are changing. We know that, for example, in the UK and Europe, you have new structures, but we still need to understand how do they work, what are the consequences. And then there is still this idea that we are connecting the source of capital, which are the clients, and then the destination, who are the fund managers and the funds. But these two worlds, as I said, communicate through us. It's also a working process for us to try to be the interface between these two worlds, right?
Is it kind of demand pull? Is there a lot of interest? I mean, obviously levels of sophistication and interest will differ, but generally speaking, is this something that, people, fund managers would just want to push onto the private wealth market, and the private wealth market is bemused, or is there a lot of interest and demand?
It depends a little bit on three things. The first one is